Good evening, everyone. Happy Wednesday, Wealth Wednesday. I hope your day is going well. I am excited once again to come to you for day 3 of my 6-day series for Financial Literacy Month. Dexter, hello. Hey, Patrice. Southwest D Work, hello there. Glad to see that you're doing well. We have something in common. Thanks, guys, for joining. Tonight, I'm going to bring you some information about one of our biggest expenses that we have, which is Uncle Sam, taxes. We're going to be talking about how to get Uncle Sam out of your pockets. I'll give it another 30 seconds or so to let some more people join, and then we're going to get right to it. I got some good stuff to share. If you know anyone who are entrepreneurs, share this information with them, tag them. This is stuff that people will want to know, how to maximize your tax deductions and get Uncle Sam out of your pocket. So definitely share this with people who need some allowances, who need some deductions. I know oftentimes when your kids, your kids become adults, you no longer get those deductions for your children. The child tax credits and things like that. My age group, we're looking for ways that we can leverage and get Uncle Sam out of our pockets. And so we're going to be talking about that. One second. So we're going to be talking about how to get Uncle Sam out of your pockets. Hey, Mo, Larry. All right, I'm going to go ahead and get started. So again, thank you for joining me. April is Financial Literacy Month. This is the month where it's all about educating people on finance. And finance has many different facets to it, which is why I'm spreading this over 6 days. Day 1, we talked about credit, how important credit is. You lose money when you do not have good credit. So we talked about the steps of how you need to be able to walk through yourself and repair your credit. Number 1, you got to understand what comprises the credit score. Number 2, you need to know what things you can do to improve those areas and the areas of focus. You can improve your credit score and refinance your home, you can refinance your vehicle, you can refinance some of your loans to get lower interest rates to bring more money back into your pocket. So that's definitely a strategy for people to use. Yesterday, we talked about the importance of residual and leverage income by being a business owner. We talked about the cash flow quadrant, where we've got 4 quadrants. One is the employee. The second quadrant is the self-employed, where you own your business, but you're still working for linear income. We talked about the business owner who has a business system. And then we talked about the investor, the one who has the greatest amount of passive or residual income through investing. So we're going to continue that theme about ownership and talk about another key benefit other than just being able to leverage people or have residual income coming in, money that's growing when you're not growing or when you're not working. You also get some other advantages. So once I get done with this series, I hope that you will see that there is no excuse for you not to have a business. I believe everybody should have a business. And the beauty is, it's very easy for you to do that because it just puts you on a completely different playing field versus when you only have your income coming in through a job. So I'm going to get right to it. So let's talk about tax deductions. Taxes is one of those things where it's everything we all have to do, but very few people understand it, right? I know 3 years ago, taxes were kind of a myth. You understood a little bit and you knew what your parents told you, as far as, when you have to do your W-4 for your job, you take the number of allowances based on the number of kids you have, which is partially true, but not totally. So we have all these things, about taxes that it's kind of mystifying. And when you read the IRS tax code, it seems like it's written in French or something, right? Because it's very difficult to interpret. And so what I want to do today is take some of that technical jargon and make it simple for you to understand some of the things that you can get in terms of tax deductions. Because again, in order to have financial freedom, you've got to make sure that you are maximizing your money. And part of maximizing your money is minimizing your taxes. So that's what we're going to talk about, all right? So let's talk about what is a tax deduction. Let's talk, what is a tax deduction? Because sometimes people don't understand that when you say tax deduction, tax write-off, what does that really mean? And essentially a tax deduction is an incentive or a benefit that the IRS, the federal government, gives taxpayers for doing certain things. So they will incentivize you, like now, if you own like a alternative vehicle, a hybrid vehicle, or a electric vehicle, you can get tax deductions, and they're incentivizing people to do that because they want to have cleaner air. You can get tax deductions through your student loans, going back to school, getting your education. You get tax deductions there. You get tax deductions if you have medical expenses over a certain percentage of what you make. So there's incentives through tax deductions that you can get based on your situation or something that you may be doing. And so it encourages people sometimes to do those things so they can get those deductions. And what those deductions mean is it reduces your taxable income, how much money that you have to pay taxes on. So if you make $100,000 and you've got deductions totaling, let's say, $40,000, that means you only have to pay taxes on that $60,000 instead of that full $100,000. So you can save a considerable amount of money by doing that. So the more tax write-offs you get, the more money you get to save. And one of the best ways to get that is by becoming a business owner. Becoming a business owner, because the IRS incentivizes us, because businesses are what drives the economy. Businesses create jobs, businesses spur the economy on. And so the IRS said, we're going to give you an incentive if you go out and generate a business to stimulate the economy. We're going to give you some breaks by way of tax breaks. And for people like you and I who maybe you don't have a big business or a giant corporation, you can still take advantage of this, because guess what? Small businesses make up the majority of the businesses. Over 70% is small businesses. So you can still get into the game and take advantage of these tax deductions to reduce your taxes by becoming a business owner. And I'm going to recap at the end some ways that you can do that, because some people feel intimidated. I know I personally never thought about being a business owner until a few years ago. And I thought, I don't even know what idea I would have. Like, I don't have an idea for a business. And so, as I learned about other opportunities, it made becoming a business owner much easier and much simpler. And I was able to get in the game of capitalism and take advantage of those tax deductions that big businesses were taking advantage of. So let's get right to it. So one of the things that I want to talk about is in America, and again, this is because of the incentives that the IRS is giving us, there's basically two tax systems that are at play. One tax system for the employees and one tax system for those who own businesses. So if we think about the cash flow quadrant that I talked about yesterday, that's 3 of the 4 quadrants: the investors, the business owners, and the self-employed. So they are placed in a separate tax system. And I'm going to explain to you how important it is and how big of a difference. Guys, people who are employees only are taxed higher than people who are businesses because you don't get as many tax incentives or tax deductions as a business owner. And I'm going to illustrate that to you so you can see the difference. So if we look here on the board, I'm going to step out the way. And if you look at the board, you can see I have two tax systems. One is the employee, one is the business owner. So the employee earns money. Step number one, you make money, right? You go to your job, you get paid every week, every 2 weeks, however your pay cycle is. You have to pay taxes before you even see your money, right? Uncle Sam gets his cut before you even see it, right? So taxes are taken out automatically. Then you get paid, and then you pay your expenses after you get paid, after taxes, right? So let's flip it to show you the advantages that a business owner has. You earn money as well through your business. You get paid first. You pay expenses first. And then you pay taxes after you pay expenses on what's left, if there's anything left. So I want you to think about that. I make money as a business owner. I pay myself. I pay my expenses, whatever those are. And we're going to talk about what some of those expenses are. We're going to cover several of them. Pay your expenses first, and then you pay taxes on what's left. So you see the difference? You're going to get taxed at a higher rate because you don't get to pay your expenses as an employee until after taxes are taken out. So you're going to get taxed on your full amount, minus maybe your 401k or whatever pre-tax deductions that you have. Whereas as a business owner, you pay taxes after your expenses. So you get to tell the IRS, Uncle Sam, I had all these expenses. So if I made $100,000 and I had in my business and I had $30,000 worth of tax deductions, well, Uncle Sam, I should only be able to pay taxes on that 70 instead of that full 100. So you see the difference with a business owner. And what most people don't realize is a lot of the expenses that business owners get to write off are things that you and I as employees are paying the same thing for. It's lifestyle expenses. And we're going to talk about that because I think people need to understand you can write off your lifestyle. And guys, please share this information. If you know of someone who needs to understand the benefits of a business from a tax advantages of a business, please definitely share this because I want everyone to understand, number one, the difference in the tax systems, and then number two, to understand what are some of those tax deductions that you can get. So really important here to look at the differences between a employee and how they're taxed and a business owner and how they're taxed. Very substantial difference. And if you guys have any questions, feel free to type your questions as we go along. If there's something that you need clarification on, feel free to type them. I'm kind of peering over here on my other screen to look at them so that I can address your questions as we go. All right, so let's get into what are these tax deductions. I'm going to cover several of the common tax deductions that you can get as a business owner. And I want to highlight a home-based business because, again, I stressed this yesterday. You know, in the digital age that we're living in, more and more home-based businesses are popping up, guys. And it's so easy to start a home-based business now. And so when I go through this, I'm going to cover these deductions from a perspective of a person who has a home-based business. It's so many opportunities, and we talked about some of those yesterday, to start a home-based business and be able to get all of this, put yourself in this tax bracket, in this tax system that the business owners are in. So the first one, let's talk about your car and truck expenses. The IRS allows you, pays you to drive your vehicle when you're conducting business. How cool is that? So if you're out conducting business, the IRS will pay you. Now, let's say you have a business that you work part-time and you use your vehicle part-time for business and part-time for personal, which is the case in most people who have home-based businesses. You don't necessarily have a vehicle that's 100% dedicated to your business. You can write off a portion of those expenses, and the IRS gives you two options. You can write off your mileage, and for 2019, the mileage is 58 cents per mile. So think about that. If you were to drive your vehicle 10 miles, that's $5.80. 100 miles, that's $58 that you can get by having a home-based business by driving your vehicle for business. So you get to write off your mileage, or you get the option of writing off your actual car expenses or vehicle expenses. So things like your lease payments if you're leasing your vehicle, if you're financing your vehicle, your interest payments on your finance vehicle. You can write off your car wash, your tags and your insurance. All of these things, all those expenses that you spend on your vehicle can be tax deductible. So you have a choice of taking one or the other. So that's huge. So think about this. If you drive your car, let's say you drive your car 20,000 miles a year, and let's just say half of those are for business. That's 10,000. At 58 cents, that's $5,800 of a tax write-off you can get for driving your vehicle as it relates to business. And I'm always telling people, you should have a business where you can conduct business wherever you go to make that mileage tax deductible. So that's pretty huge, guys, to be able to write off your mileage. So that's the first one. Now, the IRS says if we're going to give you these tax breaks, you got to keep good records. And we're going to talk about the importance of keeping good records. So it's important that you keep track of your mileage. Now, the beauty is I'm going to tell you a solution that can help you easily keep track of your mileage, but you do have to keep good records in order to get these tax advantages of having a business. All right. So that's the first one, is the vehicle. Number 2, meals. If you are conducting business over a meal, you are able to write that off. The IRS gives you a 50% tax deduction for meals. That is so cool. I tell everybody, when I go out to eat, I'm always going to conduct business so I can write off that meal. Now, there are some stipulations around that. Number 1, you have to talk about business during the meal, right? Number 2, you have to document, again, keep good records. You got to say who you were having dinner with. Was it a client? Was it a business meeting between business partners? Was it a team event with if you have a team? So you have to talk about what the business was for. You have to document that. And then if you're just going to dinner with like your mate, well, sorry, that doesn't qualify as a business purpose unless you and your mate are both business partners in business together. Or if you're just going to eat by yourself, that's not considered meals in the sense of you're working toward your business. So have somebody come tag along with you and go eat, and now you get to write off that meal. So that's a huge break, especially if you're a person who likes to eat out a lot, right? You can get some tax deductions for that. So that's pretty cool. You also, for meals, should set up your appointments in advance. If you were to ever get audited, and I tell people, if you follow these instructions, you keep good records, you don't have to worry about getting audited by the IRS. But you want to have records of that. So if you're going out to eat and you're meeting somebody, set up an appointment in your calendar. All of our smartphones have calendars. Set up an appointment so that you've got evidence should you ever get audited, that you had planned this meal in advance. The third thing that I want to talk about is communication. The IRS allows you to write off your communication expenses. So think about this. I'm using my cell phone right now to conduct business, guys. This is my cell phone that's airing. I'm using my internet. I'm at home using my internet. And so guess what? I get to write off my cell phone bill. I get to write off my internet bill, And should I be doing something at home where I need to broadcast something through cable, I can write off my cable bill, a portion of it. Again, because I use my phone for both personal and business, so I can't write off 100% of it, but I can write off a fair percentage equivalent to the amount of work that I do for my business. So really important things to understand about communication. Website, if you have websites for your business, you can write those off. Anything around communication that you're doing in the aspect of business is tax deductible. So you can write those things off. Communication is the big one. Interest payments, interest on your assets. The IRS says if you have assets that you're using in business that you are paying for or financing, you're able to write off the interest payments on those. So what are some examples of assets? Well, your vehicle could be one, interest payments on that. If you're financing your phone, that's an asset. You can write off if you're paying installment payments for your phone and you didn't pay for it up front, you can write that off. The interest payments for that. If you have a computer that you're financing, that you pay, you didn't pay for outright, you can finance that. So any assets, things that you use in your business that you're financing, you can get those as tax deductions. Guys, if you're getting some value out of this, if you like what you're hearing, if it makes sense, give me some feedback, give me some hearts, some thumbs. Let me know that what you're getting is helping. If you're learning a nugget that you didn't know, let me know, because my goal again is always to give you some value and give you some things that you can go back and apply in your own business or in your own life. So interest is a huge one. Next one, travel. I love this one. If you guys know me, you know I am always on the road. And when I became an entrepreneur, I used to think about how, and I still do this, in corporate America, I travel a lot for the companies that I work for. And over the last 20 years, I've done so much travel for the companies, and I would always write off all this stuff. I had to do my expense reports, right? So I would expense the mileage that I drove to get to the airport. I would expense, the airfare and the money, the food that I did. Up until 2018, I was expensing the entertainment if I was taking clients out for different things. And so I was always writing these things off for the business, and I never understood what that could mean for me getting a business. So once I actually got a business, I'm like, wait, you mean to tell me I can write off my own travel expenses by having a home-based business? You mean to tell me I can write off my cell phone bill, my mileage on my vehicle by having a home-based business? So it's very empowering to know that you can get in that same game as the big business, the big corporations, by having a home-based business. So travel. If you're conducting business for travel, you get to get a tax deduction. You get to get a tax deduction, guys, for traveling related to business. But again, there's stipulations for that. You get 50% on your meals for travel. So again, that same thing for meals still holds true when you're on the road. When you're traveling, you have to be away from what's called your tax home or your tax city. So I live in Detroit. I can't say I'm taking travel and I'm in Detroit, or I'm going to Southfield and I'm saying I'm traveling, right? So it's got to be a place where you have to stay over a period of time, overnight or something like that. And that's where your lodging can get covered, your meals, and any other incidentals that you may have that you incur while you're traveling. Of course, your airfare. So for me, having a home-based business, and my home-based business just happens to be related to finances, which you can talk to anybody anywhere about finances, I always make sure I'm conducting business when I travel. And just like the meals, the travel, you have to establish an intent for the travel in advance. You have to establish intent for the travel in advance. So that's really important that you do that. Which means that, if you're meeting someone, set up a calendar event, or, if you've got a flyer or something, but you've got to establish that intent prior to you making the trip, that the trip is for business. And if you don't conduct business the entire time, then you have to take a portion of it that you can write off. But I tell everybody, think like a business owner. You should be conducting business everywhere you go. I have a saying, and me and some of my business partners, we have a saying that, we no longer go on vacations, we go on business trips, because we always make sure we're conducting business when we're traveling. I got some trips coming up in the next month, and you better believe they will be written off as business expenses, because I will be conducting business while I am away. So huge benefit. And there's two methods that you can write off, and I'm not going to go into a whole lot of detail on this, but know that you can actually capture the actual cost, or you can capture what's called per diem. And per diem means it's a sum total per day, and it varies by the location wherever you're traveling. Sometimes per diem is a better opportunity if you are traveling in a location that has a high per diem rate, and it may be more advantageous to get just a flat rate instead of tracking your actual costs. So that's a great one for travel. I mean, if you're a traveler, you need to have a home-based business for sure, so you can turn those trips into tax deductions. And if you travel a lot, that's definitely something you should be doing. Wages. Now, this one I know blows a lot of people away. I was blown away when I learned this. Did you know that the IRS will pay your children? You can pay your children, you can hire your children to work for you in your home-based business, and they do not have to pay taxes. So if you've got children under the age of 18, you can hire them to work in your home-based business up to $12,000 a year per child to work in your business, and you can write that off, and the kid doesn't have to pay taxes on it. So how cool is that? So if your kids are already doing stuff around the house and you have a home-based business, you just need to formalize it. You just need to formalize that relationship of them cleaning up the house and make it a business-related activity, and you can set a wage for paying them to do that. Now, there's some more details that I'm not going to get into tonight as far as the steps that you need to take, because again, remember, you have to have a good paper trail of what you're doing. So documentation is key. If you're trying to take advantage of all this stuff and you don't keep good records, you are setting yourself up to be in trouble with the IRS. So I'm going to tell you about a solution for that once we get to the end, because keeping good records is really good. You have to pay a reasonable wage are some of the guidelines, and the kids actually get an opportunity to file their tax returns. When I learned about this, my children were already adults, so I was like, darn it. But I was still able to hire them as independent contractors to work in my business. So my children, they helped me out. I helped them out financially. They helped me out because I now write off the money that I would otherwise have just given them as a tax deduction, and I hire them to work for me. So guys, these are all what I call secrets of the wealthy, thinking like the wealthy. If you want financial freedom, you got to start thinking outside of the box, because again, this stuff that I'm sharing is not taught in school. So once you get the knowledge, your mind starts to change, and we call it a mindset shift. Shift your mind and you can shift your money. When you start to think like a capitalist. A capitalist is one who looks at how can I take advantage of the guidelines that are the legal laws to my advantage to help me get myself on the road to financial freedom. All right. So the next item that I'm going to talk about is the home office deductions. If you have a home-based business and you operate your business out of your home, you're eligible to take a home office deduction. Now, what does that mean? Well, you can, the expenses that you use for running your business. So like right now I got lights going, right? I got electricity. I'm working, I'm doing this related to my business, and my financial business, but I'm using the lights, right? I'm using the electricity. So those are things, if you have a home-based business, that you can get as a tax deduction for your home office. But again, there's guidelines, as there are for everything, on what you can do. So there's two ways that you can take the home office deduction. One, and let me just tell you this right now, to take the home office deduction, your office has to be clearly designated as a space for doing business. So you cannot say your dining room table that you eat on dinner off of and you entertain guests and say that's my home office. That's not going to fly with the IRS. You know, it has to be a separate location. So if you do truly have an office where you conduct business, you got two ways that you can calculate how much of your total bills that you can write off. The first way is a simplified method where you can take just the total square footage of the office. You can measure it, get the total square footage, and you just get $5 per square foot and calculate it that way. And that tells you whatever, that's the amount that you can write off. Or you can do actual expenses. You can do your actual expenses where you look at the mortgage, the real estate taxes, the utilities, the homeowner's insurance, the repairs, and you can say, okay, if my house is 5,000 square feet and my office is 500 square feet, that's roughly 10%. So I can take 10% off of the total cost of all of my expenses, and that's what I can use as my home office deduction. So it's a powerful way to be able to take advantage of that. Now, there's also one other qualification that I should mention. In order to take the home office deduction, you have to have a profit. You cannot be taking a loss in your business and get the home office deduction. So that's an important designation that you need to understand. You have to have a profit in order to take that deduction. So those guys are some of the I just shared with you 7 different types of ways that you can, types of deductions that you can take for the business. There's a lot more. There are over 400 different deductions that you can take. I just wanted to cover the most common ones. And I also want you to understand that this is stuff you're already paying for. You're already going out of town. You're already driving your car. You're already paying your lights and gas and all of those expenses. You're already going out to eat. Why not get yourself a business and be able to write that stuff off? Again, steps to financial freedom. Start thinking like the wealthy. If you want to be wealthy, you got to start thinking like the wealthy, and you got to start acting like the wealthy. And one of those things is to get yourself a business. And an easy way to do that is through having a home-based business. And as I mentioned yesterday, network marketing is a really easy way to do it. You can get started very easily and be able to take advantage of all these deductions through having a home-based business and network marketing. Very easy to do. And it shifts you from here to here. You may still be here. As I mentioned yesterday, I'm still in this space, but I get to take advantage of this because I have businesses. I have actually more than one business. So I'm able to take advantage of this because I went and got myself on the other side of capitalism. So if you truly want financial freedom, if you truly want to get Uncle Sam out your pockets, you know, there's definitely other deductions that you can get, which I would encourage you to follow with your tax preparer to find out what some of those are, but definitely get yourself a business, guys. And then the last piece that I want to talk about, going back to the record keeping. The IRS says, if I'm going to give you all these tax benefits, you have to keep good records. And so I know some entrepreneurs, and I've talked to some tax preparers who have entrepreneurs who come in with a shoebox of receipts, right, that they've thrown and kept, throughout the year. And then unfortunately, a couple months, the receipts start to fade. And so for every deduction you don't get, you're leaving money on the table. So I tell, if you're already an entrepreneur, stop leaving money on the table. Keep your records as you go. And the beauty is there are tools that allow you to be able to do that. I happen to know of a tool, and I actually use a tool, and I actually offer a tool through my business that allows you to digitally keep track of all of your expenses through an app on your phone, and actually take pictures of your receipts so you can upload them. And then when it comes to do your taxes, comes to tax time, you can actually print out a profit and loss statement that you can take to your tax preparer, and they'll hug you and kiss you because you're coming in all organized. And again, also, you feel good about being audited because you got your act together and you have all your ducks in a row lined up because you've been keeping track of your expenses as you go. So that's really powerful. Something else that, again, you have to be able to substantiate the validity of your expenses. So just keep good records, keep your calendar up to date, make sure you're keeping records of all your business activities. So if you are ever audited, you'll be good to go. And then the last thing I want to tell you is this, and this is a little bit controversial because this topic actually keeps coming up and it's still in the news today. So I want to just shed a little light on this situation. There's been a lot of talk about our president, 4 or 5, who is not divulging their taxes. And there's all sorts of legal activities underway to divulge the taxes. And this goes all the way back to the presidential debate in 2016, right? Where Hillary Clinton said, you didn't pay any taxes. And the response was, well, if you don't like the fact that, I didn't pay any taxes, or something to that effect, you need to change the laws. And he also said, that makes me smart. And guys, I'm here to tell you that when you understand capitalism, you understand that statement that was made. Not that I agree with any philosophies, but that particular point is absolutely true. When you understand capitalism and the guidelines that are put in place for those who own, you realize that if you're on this side, you're at a disadvantage compared to people who are on this side of the equation who are business owners. So you can put yourself in a position to not have to pay taxes, because if you make money, you get paid, and your expenses are greater, you can put yourself in a position where you don't have any money left after expenses to pay taxes. So yes, there are corporations who are making money and not paying taxes because they're taking advantage of all of those different tax deductions. And the good news is, as everyday people, you and I, we can take advantage of those same things as well. So I encourage you, if you don't have a business, get in the game, take advantage of the tax deductions, and get Uncle Sam out your pockets. And now you can use that money for other things, like we talked about before, paying your credit. If you free up some cash flow by getting your business, you can use that cash flow that was previously going to taxes to fix your credit. We're going to talk about another way tomorrow that you can use it by getting yourself out of debt quicker. So debt is the next topic. And then the last thing that I want to tell you, and a lot of people don't know this, as a home-based business owner, if you work a job, the IRS will allow you to get additional allowances on your W-4 by being a business owner. And this is stuff that I teach on a regular basis. In fact, I'm teaching a lesson on this tonight about how you can get additional allowances even while working. You can still take advantage of this and get additional allowances on your W-4 to cut your taxes by being a business owner. And a lot of people don't know that. So definitely, number one, I always talk about education, preparation, and action. Now you've learned what some of these strategies are. The preparation is an action step, actually. I would like for you, if you already have a business, go back and look at what you did for 2018. If you've already filed your 2018 taxes, go back and look at them to see if you actually are missing out on money. Because the beauty is you are able to file an amendment on your taxes, and I would encourage you to do that. If you know that there are certain tax deductions that you have not been taking, that you learned, you have a right to go back and adjust that and submit it, provided you've got documentation of it. So that would be one action step for the entrepreneurs who already have a business and maybe you're not taking advantage of it. And I meet entrepreneurs on a regular basis who simply do not understand all the things that they should be writing off, and they're losing money year over year over year, potentially thousands of dollars. Me personally, running these strategies, I have reduced my tax bracket significantly. very significantly, down to like 15% from 25-35% tax bracket. So these strategies work if you apply them. Again, education is the first thing, preparation, what are you going to do now, and then move into action. So the second action step is, if you don't have a business, you need to get one. And guess what? I can help you with that, or whomever invited you to this call, they may be a business owner, they can help you with that as well, because everybody needs a business, even if it's on a part-time basis, even while you're working your regular job. Again, having another stream of income coming in, but also being able to take advantage of these tax deductions. Last thing I'm going to say is, we all know Warren Buffett, right? Warren Buffett is the big investor. I talked about him yesterday. Warren Buffett has this statement that he made, and it's very profound. He says that I pay less taxes than my secretary. Now imagine that, Warren Buffett, multi-millionaire, if not a billionaire, who pays less taxes than a secretary, and how much does she make, right? So that's very profound in saying that you may think that it's wrong, but that's the law. It's legal, and these are the incentives that the government gives for people to build the business and to spur the economy through ownership. And so my saying to you is, you need to get you some. You need to get in the game and get you a piece of this capitalism and get Uncle Sam out your pockets, so that you can take that money that you're already spending on all of these things I just talked about and bring it back into your household. All right, so wrapping it up, I want to see if there's any questions. I didn't see any questions popping up. If you have any questions, definitely type them. I'm looking at the comments. I don't see anything. If you like what you've heard, if you got some value out of this, give me a 5. Give me a high 5. Put a type of 5 in the comments if you got some value out of this. Because I want to definitely, in the spirit of Financial Literacy Month, make sure that I'm sharing some nuggets that you can use in your own personal lives and maybe the lives of your loved ones. Tomorrow we will be talking about debt. Debt. It's a grim situation, the amount of debt that we have. I posted a statistic the other day about the fact that in U.S. the student loan debt is several $1 trillion, and it's at a record high. And I heard just this morning, I was listening to a podcast, and I heard just this morning that debt, student loans, is now the government's biggest asset. Your debt is the government's biggest asset, guys. So we're going to talk about things that you can do tomorrow to accelerate your debt elimination. So we talked about getting Uncle Sam out your pockets. Tomorrow we're going to talk about getting those creditors out your pockets. So be sure to tune in. Same time tomorrow, 7 p.m. Eastern Standard Time. Happy Financial Literacy Month, guys. Have a good evening.